Okay, now if we are calculating our depreciation expense using reducing balance method, okay, so we're using example 4 to illustrate this method. Okay, Syarikat Maju purchased a machine in 2015. Okay, the price of the asset is 50,000. It has a useful life of 4 years and the salvage value of the machine is 7,000. So the depreciation expense is given a rate which is 39%. Okay, so we need to calculate the value for the yearly depreciation expense. Since we are using the reducing balance method, so you need to calculate the depreciation expense every year. You can't use the same techniques you do for straight line method. Okay, so that means you need to calculate the depreciation expense for 4 years. Okay, so how do we calculate the depreciation expense using reducing balance method? Okay, you need to use the rate given and then you times or you multiply with your net book value. Okay, net book value means you need to take the cost of the asset and we will minus with the accumulated depreciation. As you can see here, we do need to minus the cost of the asset with the salvage value because every year the book value is actually a reduced amount from the actual cost. So we do need to minus the salvage value from the asset to calculate the depreciation. Okay, all right. So for the solution, okay, so the asset was bought here. The amount of the asset, okay, is 50,000. Okay, for the first year of the asset, okay, that is 2015. The depreciation is 50,000 multiplied by 39%. Okay, so this is where you get 19,500. So this is the depreciation expense for the first year. So the accumulated depreciation for this year is 19,500 as well. Okay, because this is the first year. Okay, and the book value, that is 50,000 minus 19,500. Okay, so that gives you the value of 30,500 ringgit. All right, so this is when you minus 50, you take 50,000 and you minus with 19,500. Okay, this is where you get the book value for the first year. Okay, all right, for the second year, all right, we are still using the same rate, that is 39%. Okay, but we'll multiply with the latest book value, right? So the depreciation expense for the second year will be 11,895. So the accumulated depreciation for the second year is 11,895 plus 19,500. Okay, this is how you get 31,395. So the book value will be 30,000. Okay, so the book value here will be 30,000. Oh, sorry. Okay, 30,500. Okay, it will be 30,500. minus, okay, 11,895. Okay, so the amount is, the book value for 2016 will be 18,605 ringgit. Okay, so we'll proceed with the year 2017. So for the year 2017, okay, we'll still taking the same rate, that is 39%, multiply with 18,605, the latest book value. So we'll get 7,255 ringgit and 95 cents. So the accumulated depreciation until 2017 is 38,650 ringgit and 95 cents. So that leaves you with a book value of 11,349 ringgit and 5 cents. Okay, so during the straight line, when we were calculating the depreciation using the straight line method, okay, we just proceed with the calculations for every year, all right, but the approach for reducing balance is a bit different. Okay, so the useful life for this asset is 4 years, so that means you will be doing the depreciation from 2015, 2016, 2017 and 2018 only. So 2018 is the final year of the depreciation expense for this particular asset. Okay, so here you must make sure during the final year of the depreciation expense, that is on the year of 2018, the book value is the same as your salvage value, which is 7,000 given in the question. So here actually I do not need to multiply 39% with the remaining book value. I will just minus. Okay, so what I do here is, okay, I will take 11,000, okay, 349 ringgit and 5 cents. I will minus 7,000 ringgit. Okay, so this amount will be my depreciation for 2018. I do not need to take 11,349 ringgit and 5 cents multiply by 39%. I don't need to do that because my intention is to leave the asset with a salvage value of 7,000. So I just take the remaining book value and minus with the minus with the salvage value, so that I get the amount that needs to be depreciated in the year 2018. Okay, so that means, okay, for the year 2018, okay, the depreciation for 2018 will be 4,349 ringgit and 5 cents. So the accumulated depreciation is 43,000. Okay, how do you get 43,000? It's actually very easy lah. Okay, you just take 50,000 and minus with 7,000 the salvage value, so you get the latest accumulated depreciation towards the end of the depreciation, towards the end of the useful life. Okay, so as you can see the explanation given below, all right. Okay, the item or this amount, this 4,349 ringgit and 5 cents, is also called as plug figure. Okay, so plug figure is the amount that we need to take out from the remaining book value, so that the asset is only left with the salvage value towards the end of the useful life. Okay, so this is a bit different from what we did in straight line method. So for reducing balance, this is how you do the depreciation expense for the final year. Okay, all right. So now we are going to see how we're going to do the disposal of the asset. Okay, 9.4, the first part of the disposal. Okay, you need to know what are the steps that you must do before you dispose the fixed asset. Okay, the first thing you need to do is you need to bring the depreciation up to date. That means you need to calculate the depreciation, especially when you are using the monthly basis. You need to calculate the depreciation for that particular asset until the date it is supposed to be disposed. Okay, so when we are disposing the asset, that means the asset is no longer with us. So you need to remove the old disposed asset accounts. Okay, and you need to close the contra at the same time. So once you get rid or you close the asset accounts, you must also close the accumulated depreciation. Okay, because the anak will follow the mak lah, right? Okay, so after that you need to record any cash amount that you receive from the disposal, because disposal doesn't mean that you just leave it by the roadside. Okay, disposal can be you are trading in the asset or you are selling the asset with a certain amount of money. Okay, so the money that you receive from that disposal must be journalized in the general ledger. Okay, so from there we can determine, okay, whether we have gain or loss during the disposal of the asset. So how do we calculate the gain or loss of the asset? Okay, so if you receive any money, okay, if you receive money from the disposal, okay, so the cash received we will minus with our book value. So what is book value? Book value is actually your asset cost and you minus with the accumulated depreciation. So this accumulated depreciation is is the amount that is updated. That means the latest value of the accumulated depreciation. Then only you can minus the amount from the asset cost to get the latest book value. Okay, all right, given the situation here, okay, so let's say we are selling or discarding the fixed asset at the end of the useful value. Okay, at the end of the useful value, that means the asset is left with only the salvage value. Okay, but in this example 5, all right, the estimated useful life for this asset is 5 years and there is no salvage value. So when there is no salvage value, that means the asset, okay, the book value of the asset is 0. Okay, so the asset was fully depreciated. So if it's fully depreciated, that means the asset is depreciated the same amount with the cost of it. Okay, so the cost of the asset is 25,000. So if you are using the straight line method, okay, for this particular asset, okay, so let's say on the 31st of December 2019, the machine is discarded. Okay, discarded, that means you throw it away. Okay, you are not selling it, you just discard it. Okay, so there is no salvage value, that means you don't get anything. All right, and as given in the question, the salvage value is 0. Okay, so how much is the depreciation expense for 1 year? Okay, so you can see here earlier, all right, okay, there is no salvage value, that means the depreciation is 25,000 minus 0, okay, and then divide with the useful life given, that is 5 years. So the depreciation expense for 5 years is for 1 year is 5,000 ringgit. Okay, since this asset is depreciated on the 31st of December, this asset is disposed on the 31st of December, that means this asset is depreciated in full. Okay, so the useful life is 5 years, that means the accumulated depreciation is 5,000 multiplied by 5. Okay, so the accumulated depreciation is 25,000. Okay, so how do we record the journal for this question? Okay, as you can see here, it doesn't mention that we are using monthly basis or the yearly basis. Okay, since it is silent, okay, so since it is silent, so that means it is using monthly basis. Okay, so if it's using monthly basis, that means the depreciation will be calculated until 31st of December. That is the date of the disposal. Alright, and that particular year you still need to declare the depreciation expense for this asset. Since the asset is disposed on the 31st of December to the 31st of December, okay, so this is between 16 to 31st. That means the month of December will be included in the depreciation as well. So the depreciation for this year is 12 upon 12 months. Okay, so before we can journalize the disposal of the asset, you must first journalize the depreciation expense for the current year, because we are using monthly basis. Okay, all right, so the first thing you need to do, you need to bring the depreciation expense to the date. All right, so we will debit depreciation expense, okay, and we will credit accumulated depreciation. This is to record the depreciation expense for 2019 only. Okay, so the depreciation for 1 year is 5,000. So once you declare the depreciation for 2019, then only you'll add up this 5,000 into the accumulated depreciation accounts. That is how you get 25,000 ringgit as the accumulated depreciation. Okay, then only we can record the disposal. Okay, so disposal, that means I need to close, or I need to get rid of the asset account, and at the same time I need to close the accumulated depreciation for this particular asset. So asset is asset is debit. Since we are closing the asset, the account will be credited. And as you see earlier, accumulated depreciation, okay, if we are increasing the amount of accumulated depreciation, we will credit. But since we want to close the accumulated depreciation accounts, we will debit accumulated depreciation. So the reverse entry will actually close the particular account. Okay, so as you can see here, we will credit accumulated depreciation. Okay, how much was the accumulated depreciation? Okay, you calculated the amount here. Alright, so the accumulated depreciation is based on this calculation, that is 25,000. So this one will be journalize here. Okay, so that is 25,000. And at the same time, I am closing the asset account. So how much will I credit? Okay, the asset, the amount that will be credited is 25,000. Okay, all right, this is the amount that we need to credit. Okay, coincidentally, the amount is the same, but actually you are recording for two different items. Okay, so the accumulated depreciation, as you calculated earlier, is 25,000. Okay, so when you credit the account, the amount to credit is 25,000. Okay, and we are closing the asset account, so that means we will credit 25,000 as well. Okay, this is how you record the disposal of the asset, okay, with no salvage value, and this is done towards the end of the useful life. So that means the asset was fully depreciated. So in this question, the asset has no salvage value, so when it's fully depreciated, the amount will be 25,000. Okay, all right. Okay, so let's go to question B. Okay, so let's say the machine is purchased on January 1st, 2015 for 25,000, and the estimated useful life is 5 years, and there is no salvage value. So the machine is depreciated using straight line method. Okay, but here we do discard the machine, but instead of discarding the machine, you are actually selling off the machine. So you sold the machine for 2,500. That means you are getting that money in cash. Okay, so as you can see here, the cost of the asset is 25,000. Useful life is 5 years, and there is no salvage value. Okay, so the depreciation expense for 1 year is 25,000 minus 0 divided by 5. So that gives you the amount of 5,000 ringgit. Okay, so since we are selling the asset towards the end of the useful life, that means we are doing it on the 5th year of the asset. So the depreciation, accumulated depreciation, will be 5,000 times 5, because your useful life is 5 years and you are selling the asset at the end of the useful life. All right, so your accumulated depreciation will be 5,000 times 5, that is 25,000. Okay, so you need to calculate whether you are getting gain or loss because you are selling the asset. Okay, it's different from what you did earlier. Okay, earlier we discard, but here we sold the asset. So the cash received in this transaction is 5,000, and the book value for this asset after 31st December 2019 is 0. How come it's 0? Because the asset cost is 25,000 and the accumulated depreciation to the date is also 25,000. That means your book value is 0. So actually you get a gain by selling the asset with the amount of 2,500. Okay. Okay, so how do we record that in the journal? Okay, as usual, the question is silent, so there is no So we are using monthly basis. So the first thing you need to do is to declare the depreciation expense for that particular year before you dispose the asset. Okay, so the adjusting entry date is 31st of December 2019. So we need to declare the depreciation expense first. So you need to debit depreciation expense for the machine, and you need to credit accumulated depreciation for the asset for 2019. So the amount here is 5,000 ringgit. Okay, all right, then only you can journalize the disposal. Okay, we will be doing the same thing. We'll close the asset account, and we also will be closing the accumulated depreciation. Okay, so your asset is 25,000 because this is until the end of the useful life. So the amount of the asset to close is 25,000. Okay, and the amount of the accumulated depreciation you need to close is also 25,000. All right, so you will debit accumulated depreciation 25,000, and you will credit asset 25,000 as well. But you must remember, you are selling the asset with this amount, so that means you will debit 2,500 because we receive money from the transaction. Okay, so for this particular transaction, okay, I will debit accumulated depreciation 25,000, and then I will debit cash because I receive money from this selling. Okay, and I am closing the machine account, so I credit machine 25,000. So as you can see here from the transaction, on the debit side we have 27,500. Okay, but on the credit side we only have 25,000, so we are short of 2,500 on the credit side. So that amount we need to add up here to balance the amount. So we need to add up 2,500 on the credit side. Since it is on the credit side, that means that is the gain on disposal.